Hey, Eric here from 5minuteinvesting.com. And today I want to talk about trading psychology. And I think this is quite an interesting topic because there has been a lot of talk about um, how one should think or feel when they are trading or investing, and how one should, look at the market. And psychology is a big part of investing and trading as well. So I want to cover this topic in this video and how it relates to making 30% from the market. Okay, so we're going to talk about what is it, what are the common mistakes, and what are some strategies that didn't work for me, and what are some of the strategies that worked for me. So what is it? So trading psychology is really how one is feeling, thinking, and perceiving the market when you are investing or trading. So for myself, I'm an investor. You might be an investor or trader, but the same principle applies. Now, the biggest mistake when it comes to trading psychology is really emotional trading. People will panic and they sell. People will be scared and they sell. And people are greedy and they hold on to the stock for longer than they want to. So these are all the common mistakes. It's all emotional related, because it's psychology. So how do you control your emotion? How do you become patient when you're investing? And that is really that's really the question you're trying to answer, is how to become patient, which solves the greed problem, and how to be confident, which solves the fear problem. Now, for some people, if you have trading psychology problem, you will actually have a hard time sleeping. You will be very stressed out and you can't fall asleep at night because you're thinking about your investments day in, day out. So it's actually quite emotionally draining, especially if you have a full-time job, and it actually hurts your performance quite a bit. And chances are, if you're stressed out, you will be making a negative return in the market. So one of my favorite books on trading psychology, it's actually called Trading to Win. And if you go on Amazon.com, you'll be able to find this book. And the concepts taught in the book are actually quite good. And, it teaches you how to visualize. It teaches you that you need to believe in yourself and you want to visualize a winning trade, and you want to let go of your bad trades mentally. And it also teaches you how to obtain peace of mind through a lot of psychological rehearsals. That's the best way to put it. A lot of psychological and mental rehearsals. You want to go through your trading plan and think about a successful trade happening for you, and that increases your success rate. And for me, that did not work out. So this actually didn't work for me, even though I actually really like this book. And it's called Trading to Win. And whenever I come across trading psychology, whether it's a blog post or a video, they always tell you to be calm and visualize and use affirmations like, I'm a good trader or whatnot. And those usually don't work for me until I discover something that worked for me. And it's actually very technical, and it's very simple, and it's quite intuitive once you understand it. Now, when you are feeling stressed out, about investing, when you're feeling stressed out about whether you're making the right decision or not, it really comes down to your investing strategy. And there's two parts to it. The first part is that your investing strategy is incomplete. Your investing strategy doesn't work. And that's very simple. And all you need to do is to figure out what the problems are and fix them. And the second one is really the investing strategy doesn't match you as a person. And you might be a full-time professional, you have a job, and you're trying to be a day trader. And it's like having two full-time jobs. You're working 8 hours, and then at home you're trading for another 4 hours and you feel stressed out. And of course you're feeling stressed out because both activities requires a tremendous amount of focus and attention. So that's what I'm talking about when I'm saying it doesn't fit your current lifestyle. So there are these two main reasons. The trading plan or investing plan itself is problematic, and the second one is that it actually doesn't fit with your current lifestyle. And I encountered both of these problems in the past, and here are some of the solutions that may help you. So the first one that helped me a lot, it's actually revolve around time horizon. So I used to be a short-term trader. I used to be a day trader, and I would spend hours after work, after school, looking at the market, and I was trading the Forex market, and it's open 24 hours. So you can think of it like a casino that is open 24 hours, and I can just jump in and gamble anytime I want. So I was really stressed out and I couldn't sleep because I would constantly think about trading, constantly trying to make the next 100 bucks or whatnot. And I was losing money. Like, it just didn't work out for me. So what I learned later on when I put together the strategy I teach in Investing Accelerator is that the time horizon is one of the key drivers of your psychology when you're investing or trading. And if you are stressed out, try lengthening your time horizon. If you're stressed out using a 1 hour chart, try 4 hour, try a daily chart. And you just want to keep expanding your horizon until it becomes boring. And that is actually quite an interesting finding, because when investing becomes boring, it's great because now you have mastered it. When investing becomes boring, it means you have a good idea of what's happening. You have a good idea of what's happening in the market, and you are able to not predict, but have a good sense of what is coming, because you can never truly predict the market. So lengthening the time horizon. So for myself, I really found peace of mind when I'm using a weekly chart. So for those who are using a weekly chart is quite a high time frame. It's the second highest time frame, which is lower than a monthly chart. And most people don't play in the weekly chart field. So I find a lot of peace of mind when I'm using a weekly chart, and that's the only one I use. I don't even use a daily chart or anything below it. Now, the second one that really helped with my investing psychology is rules and better rules. For example, what if you want to avoid like a panic sell-off? Well, then you just got to have some rules. You need to have some target on when you want to exit. You need to have some target on when you want to enter. And you want to have a few situations, a few strategies planned out ahead of time so you know what to do regardless of what happens. For example, let's say you enter into a stock and the stock goes up. Now, how much should it go up by before you exit? See, that's one rule. How much should it go up by so then you're breaking even? See, that's the second rule. What happens if it doesn't hit your target and the stock starts to reverse? Do you have a rule to identify a top? See, that's 3 strategies just for exit. And what happens if it goes down? What should you do? Should you buy more? Should you sell? That's another rule. And these should be built into your trading plan. And you should detail it out, and you should have one answer, at least one answer, for each of the situation. Okay, yeah. So the third thing that really worked for me is really revolving around the philosophy of focus investing. Now, if you are reading books on investing, if you are watching YouTube videos on investing like this one, chances are you came across the idea of diversification. But if you analyze Warren Buffett, Berkshire Hathaway, and how he invests in the market, you'll realize he actually focuses his money on the top 10 stocks that he owns. And you can actually go look up his portfolio and see his portfolio allocation, and you'll find that the top 10 stocks represents 80% of his portfolio value. So and he calls it focus investing. And I think the book called Warren Buffett's Way actually goes into detail on what focus investing means and how he understands focus investing. But essentially, focus investing is about investing in the best opportunities in the market. It's about finding the top 10, top 20 investment opportunities for your lifetime and just buy more of that. And you hold it over long term, and chances are you will beat the market. So when you focus on investing a few great companies, your psychology will naturally improve. You see, when you do these things, your psychology improves. You extend your time horizon, right? You have better rules, you focus investing, your psychology will improve and you will feel better. And it actually helps a lot for you to sleep better if you are stressed out right now about investing. And also reduces the amount of work you need to do, because when you're looking at a weekly chart, you actually don't need to do that much work versus when you're looking at an hourly chart. I used to have a trading app on my phone, and I used to use the hourly charts. Then I would check the app every 5-10 minutes, and it's just like I'm a madman. I'm just looking at the charts continuously to see if there's an opportunity when I'm going out, when I'm eating, when I'm like at home reading a book. I would just leave the app open or on my desktop open so that I can track the market. But I was spending so much time on investing or trading when I should just be as passive as possible. So these 3 strategies really work for me. And the final one is just a quick tip. So when you adopt the philosophy of focus investing, you can diversify up till 5 to 10 stocks. So if you want to be a passive investor, then I would suggest you to diversify up till 5. That's a pretty good number of stocks to hold in your portfolio. Now, if you want to be even more diversified, you can try 10. But yeah, 5 to 10 is what I aim for. And as of right now, I have 5 stocks in my portfolio. That's it. And my annual return for the last 3.5 years is 45%. So it's higher than 30%. So if you like this video, you can leave a comment below, and you can like it and share it. And let me know if you have any other questions.